Welcome back to the Deep Dive. Today, we're going to try to get to the bottom of Den Networks' latest financial report.
Okay.
It's for Q3 of the fiscal year 2024-25.
Yeah.
And, you've sent us quite the stack of documents, financial statements, presentations for investors, regulatory filings, the whole works. And it looks like we've got a real puzzle on our hands here. Kian's revenue is holding steady.
Right.
But their profits are down. They've got tons of cash just sitting there. But they're having a hard time attracting new customers.
Interesting.
So let's open up these documents and see if we can figure out what's really going on.
All right, sounds good. Let's start with the basics. Den Networks is a major cable and broadband provider in India.
Okay.
They deliver service to over 450 cities and towns across 13 states. And they're actually the parent company of Den Broadband Ltd, which you may have heard of.
Yeah, I've definitely heard of them. So they're a big player then.
Oh, yeah.
But some of these numbers are a little concerning. Their total revenue for Q3 came in at Rs 261 crore. That's up 5% from last quarter, which is good. But it's actually down 4% year over year.
So a little bit of good news.
Yeah?
And a little bit of bad news.
Yeah, it's kind of a mixed bag.
Yeah.
Then there's the issue of profitability.
Right.
Their EBITDA landed at Rs 28 crore, which, if you're not familiar, stands for earnings before interest, taxes, depreciation, and amortization.
Right. It's a way to measure core profitability.
Exactly. Now, that number is flat compared to last quarter, but it's down a massive 32% from the same time last year.
Oh, wow.
And their profit after tax, or PAT, also took a hit. It came in at Rs 42 crore. That's 19% lower than the previous quarter and 12% lower than last year.
So their revenue is stable-ish.
Yeah.
But profitability is way down? That's pretty puzzling.
It is. Why would profits drop so much if revenue's relatively okay?
Well, there might be a clue in their expenses. It looks like their content costs have gone up 13% this quarter.
So it's costing them more to keep the lights on and the shows running.
Basically, yeah.
Yeah.
And that's eating into their profits.
Makes sense with all the competition for new content.
Yeah, it's like what's been happening in the Indian film industry.
Oh, right, with production costs going through the roof.
Yeah, all the big budget movies and stars demanding huge fees. I wonder if DN's facing a similar situation.
It's definitely possible audiences have more options than ever these days with all the streaming services.
Right.
So D might be having to shell out more cash just to keep their viewers happy.
It's interesting you say that because if we break down their revenue a bit more, their subscription revenue, which is kind of their core business,
Right.
it's down 6% from last quarter and a whopping 20% year over year.
Huh. So that could mean they're actually losing subscribers.
Yeah, maybe to those streaming platforms we were just talking about.
Could be. But here's a twist. Their placement and marketing income has actually increased by quite a bit.
Really? By how much?
27% compared to last quarter and 19% year over year.
Placement and marketing income. What exactly is that? I'm not a finance person. Oh, yeah, sorry. Placement and marketing income is revenue from things like advertising and brand promotions.
So basically it means DN's finding new ways to make money.
Yeah, exactly. It could mean they're trying to adapt to the changing market,
That makes sense. I saw a billboard the other day for a Den Broadband promotion.
Uh-huh.
I wonder if that's part of this new strategy.
It could be. It seems like they're making up for the lost subscription money with this other revenue.
So it's not all bad news?
Not necessarily. But there's another number that's a bit troubling.
What's that?
Their activation income.
Which is?
It's the revenue they get from new customers signing up.
Oh, right.
And it's down significantly compared to both last quarter and the same time last year.
So fewer people are signing up with Den?
Yeah.
Is that because of their pricing?
Yeah.
Marketing? Or maybe the competition from other providers?
All of the above, maybe? It's definitely something to watch closely.
For sure. If they don't turn that around, it could have some pretty serious consequences. On a more positive note, their investor presentation mentioned a 96% online collection rate.
Okay, so they're doing a good job collecting payments from their existing customers.
Exactly. Which is good, right?
Yeah, that's definitely a plus. It shows they're running a tight ship in terms of collecting what they're owed.
So we've got this picture of DN.
Yeah.
Their revenue's decent, but they're struggling with profitability.
Right.
They're shifting their revenue streams around a little bit, and they're having a tough time attracting new customers. But there's one more thing we need to talk about: their balance sheet.
Right.
DN is sitting on a mountain of cash. Rs 3,089 crore to be exact.
Wow.
And they have zero gross debt.
That's a pretty comfortable financial position, wouldn't you say?
It's definitely impressive. That kind of cash gives them a lot of options. They can adapt and maybe invest in new strategies to deal with these challenges.
Right. Like what?
Well, they could expand their broadband network, develop new services, or even acquire other companies to gain more market share.
So let's dig a bit deeper into their different lines of business. Okay.
DD's results are split into two segments: cable distribution and broadband. Cable distribution is still their main source of revenue.
Right, as you'd expect.
Yeah, but it did see a year-over-year decline. Broadband, on the other hand, is a smaller part of their business, but it actually showed some good growth.
Interesting. How much growth are we talking?
Their broadband revenue for the 9 months leading up to December 31st, 2024 was 349.07 crore.
Okay.
That's compared to 244.59 crore for the same period last year.
That's a pretty significant jump.
It is. And remember how we were talking about their overall profitability being down?
Yeah.
Well, the broadband segment actually went from a loss in Q3 of the last fiscal year to a profit this year.
Huh. So their broadband business is actually doing quite well.
Exactly. Maybe this is the key to their future.
Could be. This turnaround suggests that their strategies in the broadband market might be working.
The kind of strategies.
Well, they could be attracting new customers with competitive pricing and better services. Or maybe they've found ways to operate more efficiently.
So it's not all doom and gloom.
No, not at all.
And they're not just hoarding cash. They've got a significant amount of non-current investments, too.
How much?
Are 63 crore as of December 31st.
Non-current investments, now, those are assets that they're planning to hold on to for a while, right?
Usually for more than a year. They
Yeah.
could be anything from real estate to stakes in other companies.
So DIN's not just reacting to current events, they're also making moves for the future.
Yeah, it's a good sign that they're thinking long-term.
Agreed.
Okay, so we're starting to get a clearer picture here. DIN is having some issues in the cable TV market, but they're seeing potential in broadband.
Right.
They're in a good financial position with lots of cash and no debt,
Yeah.
and they're making investments that could help them navigate this shifting landscape.
It's all very interesting. But there's one more piece of the puzzle we need to consider: the regulatory environment.
You're right. The cable and broadband industries are heavily regulated in India, and any changes to those regulations could have a big impact on how DN operates.
Exactly.
So let's dive into that next and see what it means for DN's future.
Sounds good to me. All right, so we've uncovered some pretty interesting stuff about DN's financials and their strategies. But to really understand what's going on, I think we need to zoom out a bit. Look at the bigger picture. You know what's happening in the overall Indian cable and broadband market?
Right, because that's going to influence these numbers.
Exactly. It's like trying to solve a crime. You need to understand the context to figure out what the clues really mean.
So what's the backdrop for Dean's story?
Well, the Indian media scene is going through some massive changes.
Okay.
Things like digitization, the internet becoming more widespread, and how people want to consume their entertainment.
Yeah. It's totally different now than it was a few years ago.
Huge difference. You've probably noticed it yourself.
Oh, absolutely. I remember when cable TV was the only game in town. And we all had these crazy channel packages with like hundreds of channels.
Yeah.
Most of which we never even watched.
Right. Now it's all about streaming services.
Oh, Netflix, Hotstar, all that.
Yeah.
I bet DN's feeling the pressure.
Oh, they definitely are. These over-the-top platforms, or OTT as they're called, they've completely changed the game. Consumers have so many choices now, and they can watch exactly what they want when they want, often for way cheaper than traditional cable.
So DN's facing disruption.
Exactly. It's like what happened to those old video rental stores when streaming took over.
Blockbuster. Yeah. Adapt or die.
Right. But what about DN's broadband business? Isn't internet use exploding in India?
It is.
Shouldn't that be good news for them?
You'd think so, but there's a catch. The broadband market's getting super competitive.
Oh, how so?
You've got big telecom companies like Reliance Jio and Party Airtel.
Okay, yeah. I've heard of them.
They're going all in on fiber optic networks.
Uh-huh.
Offering really attractive broadband packages for great prices.
So it's not just about providing internet access anymore.
Real.
It's about having the fastest speeds, the best coverage, and the best deals. Exactly. Den's getting squeezed from both sides, losing cable subscribers to streaming and battling it out in this cutthroat broadband market.
Yeah, that sounds tough. But they're not exactly starting from nothing.
True.
They do have that healthy cash position and no debt.
You're right. That gives them some wiggle room to make strategic decisions.
Exactly.
Yeah.
So they've got resources they can use to fight back.
And it looks like they already are. Remember how we talked about their placement and marketing income going up?
Yeah.
That suggests they're trying to find new ways to make money.
Beyond just subscriptions.
Yeah. They're thinking outside the box.
What kind of strategies could they be using?
Well, for one, they could team up with content providers,
Okay.
offer exclusive content or package deals that combine cable and broadband.
Interesting, like a bundle.
Exactly. They could also focus more on targeted advertising,
Right.
using what they know about their customers to show them more relevant ads.
That makes sense. It's kind of like how some newspapers offer digital subscriptions now.
Oh, right.
With extra content and perks, DN could be doing something similar.
Maybe. But remember, their activation income is down.
Yeah, that's right.
Fewer new customers.
Exactly. So they need to figure out how to attract more people.
Right.
Maybe highlight the value of these bundled services or target specific groups with special offers.
Okay.
They could even partner with other companies to reach a wider audience.
Like who?
Maybe mobile phone providers or those big online shopping platforms.
So even with the advertising revenue, they still need to figure out how to bring in those new customers.
Definitely. If they don't, their long-term growth is at risk.
Okay, so now we're getting into the really important stuff.
Right.
The regulatory environment.
Specifically, we need to talk about the Telecom Regulatory Authority of India, or TAI.
TAI. I've heard of them, but I'm not totally clear on what they do.
So TRAI is the independent watchdog for the telecom industry in India.
Okay.
They're there to ensure fair competition, protect consumers.
And help the whole sector grow. They've been busy introducing regulations that directly impact companies like DN.
So TRAI is like the referee making sure everyone's playing by the rules.
Yeah, good analogy. And making sure consumers aren't getting ripped off.
What kind of regulations are we talking about?
One of the biggest is the new tariff order.
Oh?
It's designed to give consumers more choice about what channels they pay for.
Oh, so it's about those big bundled cable packages we were talking about earlier.
Exactly. TRAI wants to change that.
Uh-huh.
They want people to be able to pick individual channels or smaller packs.
Based on what they actually watch.
Exactly.
Yeah.
That sounds good for consumers, right?
It does, but I bet it's a headache for companies like DN.
Oh, yeah. It's a big shift for them. They have to figure out how to adapt their business model.
Right.
And still make money.
It's a challenge.
Definitely. It could mean lower average revenue per user if people choose smaller packs. But it could also bring in new subscribers who didn't like those big, expensive bundles.
It's a bit of a gamble for DN.
It is. They need to figure out how to survive in this new world and stay profitable.
And, of course, they have to make sure they're following all these regulations.
Of course. Which can be a bureaucratic nightmare.
I bet. So TRAI is shaking things up in the cable market. But what about broadband? How are they influencing that?
TRAI is a big player in the broadband space, too.
Okay.
They're pushing for wider broadband access.
So more people getting online.
Exactly, which is great for a country like India with such a huge population.
Right.
But it also means more competition for Dane.
How so?
TRAI wants a level playing field.
Okay.
Multiple providers, all offering competitive services. They're keeping an eye on things like licensing requirements, how the airwaves are divided up, and net neutrality rules.
Net neutrality? Now, there's a term that gets thrown around a lot.
Yeah, it's a big one. So net neutrality basically means that all internet providers have to treat all data equally.
Okay.
No favoring or blocking certain websites, apps, or content.
So DN can't prioritize their own stuff over their competitors.
Exactly. They have to give everyone a fair shot.
Interesting.
TRI is really committed to net neutrality in India.
Good.
It's great for consumers and for fair competition, but it also means that DN can't just give themselves special treatment to get ahead.
I see. So TRA is a big deal.
Huge. They're shaking things up in both cable and broadband, creating both challenges and opportunities for companies like DN.
It's like DN's walking a tightrope.
Yeah. Good analogy.
They're trying to balance their business goals with all these regulations.
Exactly. And to really figure out their next steps,
Yeah.
we need to take a closer look at how they're managing their money.
Right, their balance sheet.
We talked about their cash position and their investments, but what does it all really tell us about their overall financial health?
And their ability to adapt to all these changes.
Exactly. Their balance sheet gives us a snapshot of their financial situation as of December 31st, 2024.
Okay.
And it can tell us a lot about their stability, their ability to meet their financial obligations, and their potential for growth.
So let's dive into that balance sheet and see what we can learn about DN's financial health and their ability to weather this storm. All right, so we've talked about DN's financials, we've looked at the industry trends, and we've even gone over the regulatory stuff.
Yeah, it's a lot to take in.
It is. It seems like they're facing some real challenges, but they also have some things going for them. What I'm really curious about is how all this translates to their balance sheet. that snapshot of their financial health.
Right. Well, their balance sheet as of December 31st, 2024, gives us a pretty good picture of their assets, liabilities, and equity.
Okay.
It shows us if they're in a good position financially to handle these challenges and maybe even take advantage of some opportunities.
So when you look at D's balance sheet,
Yeah.
what stands out to you?
Well, one of the first things you notice is their cash situation. They got a ton of it.
Like how much?
3,089 crore in cash and cash equivalents.
Whoa, that's a lot of money.
It is. It gives them a lot of flexibility to make strategic moves.
Yeah, like a nice safety net.
Exactly. But it's not just about having cash. It's about managing debt, too.
Right. What's their debt situation like?
Well, that's the impressive part. They have zero gross debt.
Zero. So they haven't borrowed any money at all?
Nope. Which is a really good sign. It means they're not weighed down by interest payments.
So they've got all this cash and no debt?
Mm-hmm.
That's got to be good for their financial stability.
Oh, absolutely. It reduces their risk and gives them more freedom to invest in growth.
Makes sense. We were talking earlier about those non-current investments they've made.
Right.
How do those fit into the balance sheet?
So those investments total Rs, 63 crore, and they basically represent DN's long-term vision.
Okay.
They could be strategic stakes in other companies,
Mm-hmm.
investments in new technology, all sorts of things.
It's like they're betting on the future.
Yeah, exactly.
So they've got assets they own
Mm-hmm.
and bills they need to pay.
Right, the liabilities.
It sounds like they're in a pretty balanced position.
They are. But what does all this mean for someone like you who's trying to figure out if Den's a company worth watching?
Right, like, is this a good sign or a bad sign?
Well, it's a strong balance sheet like Den's is usually a very positive signal for investors.
Yeah.
It means they've got the financial resources to handle market ups and downs,
Mm-hmm.
to pursue growth, and maybe even reward their shareholders with things like dividends.
So a healthy balance sheet is a good indicator.
It is. But remember, it's just one piece of the puzzle.
Yeah.
You also need to look at their income statement, which shows their revenue and expenses.
Right.
And their cash flow statement, which tracks the movement of cash.
Like I said, it's a puzzle.
Yeah, you need all the pieces to see the full picture.
Speaking of the big picture, we've covered a lot today.
We have.
Den's financials, the industry trends, the regulations. What does it all tell us about their future? Are they going to make it?
It's tough to say for sure.
Yeah.
There's no magic crystal ball.
Right.
But I think it's safe to say that Den is at a crossroads. They're facing some big challenges, especially with their traditional cable TV business. But they've also got some advantages, a strong financial base, a growing broadband segment,
Right.
and a willingness to adapt and try new things.
So which way will they go? Will they focus more on broadband, try to reinvent their cable offerings, or maybe do something completely different?
That's the big question. The next few quarters will be crucial for them.
Yeah, their decisions now will determine whether they sink or swim.
Exactly. It's
Yeah.
going to be very interesting to see what they do.
Well, we've given our listeners a lot to think about today.
We have.
We've taken a deep dive into Den Networks, their financials, their industry, and the regulatory environment.
Hopefully they now have a better understanding of what's going on with Den.
Yeah, they can watch Den's next moves, analyze their future reports, and draw their own conclusions.
That's right.
Thanks for joining us on this deep dive into Den Networks.
It was my pleasure.
We'll be back soon with another fascinating look at a company, an industry, or a trend that's shaping our world.
Until then, keep learning, keep questioning, and keep diving deep.
See you next time.